In this week, you will learn about the CPA materials on not-for-profit organizations. Either you can watch the lectures from the Baker course, which is great, or you can read the module that I posted to Blackboard, or you can watch this brief video. So here you will have a recap of what you learned in chapter 18, and you will have some CPA type practice problems. So the module starts discussing with the characteristics of the not-for-profit entity. What are the major characteristics of not-for-profit entities? One of the major characteristics is that a majority of their earnings or incomes or revenue sources are contributions. So individual donors or organizational or institutional donors or governmental entities can contribute and give money as a charity. So the major source of their revenue is contributions from the donors. So you will learn here a lot about contribution revenue. Another important criteria, you have to remember that they don't make any profit. So there is no profit motive, just like the for-profit entities. Of course, they need to operate, run the organization efficiently, but the motive is not making profit. Also, there is no ownerships. For a not-for-profit entity, you will not find any stockholders or group of stockholders, and there is no ownerships. Now, if I give you some examples of not-for-profit organizations, it could be mostly healthcare related, educational, or voluntary charity welfare organizations. So for healthcare, you will see that there are several hospitals, nursing homes, hospices, or educational institutions. Mostly those are private, not-for-profit colleges and universities, such as Sacred Heart universities, or you will also see some other charity organizations, for example the Red Cross or United Ways, or some religion related organizations. Now, not-for-profit organizations also need to prepare their financial statements. Although they don't make profit or they don't have any group of owners or stockholders, still they are obligated to prepare the financial statements and inform it to different parties. So who are the major users of the financial statements? Of course, donors, because donors provided huge amount of money and they need to know how the funds are efficiently utilized. Or members, board of members, it could be, or other community members, creditors, governmental or regulatory organizations. So they all need to know the financial information of not-for-profit institutions, and that's why not-for-profit institutions will prepare their financial statements. And remember, not-for-profit uses accrual basis accounting, and this accrual basis accounting is just like the for-profit businesses accounting methods. That means you have to record a revenue when you earn. Even it's the same for the contribution revenues. You have to record an expense when it's incurred. So not-for-profit also follows full accrual basis accounting. And who prepares the financial statement codifications or all those accounting principles? It's the FASB. Just like for-profit entities, FASB also prepare their financial statements, or ASC, that means accounting standard codification. Now, all not-for-profit entities will prepare 4 parts of their financial statements. One is statement of financial position. This statement is just like a balance sheet. It will give you a snapshot of not-for-profit organizations' assets, liabilities, and net assets. There is no stockholders equity part. So first part you will learn statement of financial position. It is balance sheet type of statement. Again, assets, liabilities, and the difference we will call net assets. And they also follow the liquidity format. That means they will put current items first, both for assets and liabilities, then long term, and they will show the difference as net assets. And these net assets will also be categorized based on donors' restrictions. And currently, FASB asks the entities to classify it into two categories: net assets with donor restrictions and net assets without donor restrictions. The other statement they will prepare is the statement of activities. This statement is just like an income statement where they will show all of their revenues. It could be service revenues or contribution revenues. They will list all of their expenses, and the difference is actually the changes in their net assets. Remember, they don't call anything as net profit. And then they will also prepare a statement of cash flows. So this part is just like a regular cash flow statements prepared by the for-profit businesses, and they will classify the different parts into three categories: operating activities, financing activities, and investing activities. And FASB actually encouraged to follow the direct method. So they will also prepare statement of cash flow. Now you will see, now the FASB is also asking to prepare another statement which was only required by healthcare entities, but this statement is now required, or this information is required for all type of not-for-profit entities. It says statement of functional expenses. Statement of functional expenses. Here they will present all of their expenses, categorized it based on different functions. So what do you mean by function classifications? So all expenses will be categorized either into program service expenses, or it will be other category will be supporting service expenses. So program service means that the expenses are related to the mission of the entity, and on the other hand, supporting service expense means that other activities or expenses that relates to administrative activities or fundraising cost. Now, not-for-profit has three options to do it. Either they could prepare here a separate financial statement, or they could put it on the face of statement of activities, classify those into columns, or they could put it in as a footnote. So there are three places they can provide this information. One is on the face of statement of activities. Another is in the notes, and the third place they can show it is a separate statement, and which is known as a statement of functional expenses. Now we will learn a little about these statements a bit detail. For example, if you look at their statement of financial position, you will see an example in the note that the statement of financial position, they will provide all of their assets, and then they will provide all liabilities, and the difference we know we call it net assets. And of course, these net assets, they will classify into two categories: net assets with donor restrictions or net assets without donor restrictions. These classifications are important because at the end of the day, the financial statement users will look at their efficiency and ability, the prospects to do future activities. If a huge amount of net assets are held with restrictions, that means they have limitations to use those assets or cash. So it is important to look at the net asset parts, which is the difference between assets minus liabilities, how much portion is with donor restrictions and how much without donor restriction. Now here you need to know one more point, that sometimes the governing board can also impose some restrictions. So these are internal body or board imposed restrictions. Board can decide a certain amount will be used for a specific purpose. Remember, it's board imposed restrictions does not mean the restrictions are coming from external donors. These are internally imposed restrictions. So if even we keep aside some money for a specific person and the decision is made by the board, that amount will be the net assets without donor restrictions. So you have to remember, board imposed restrictions are not imposed by the external donors. So if we keep aside some amount, we will show it under the net assets without donor restrictions. Now, if you look at the note here, you will see on page number 8 and 9, they gave you the examples, very simple examples, and you will also see that there are two categories, which is really important: net assets without donor restrictions and net assets with donor restrictions. In this module, you will also see they are discussing about the statement of activities. Statement of activities are really an important financial statement for any not-for-profit entities. So statement of activities will list all of their sources of revenues. It could be contribution revenues or any type of exchange service revenues, and they will also list all of their expenses. And then the difference, we call it changes in net asset. So statement of activities, after listing all revenues and expenses, the difference, we don't call it here, we don't call it net income, rather the difference we will call it net assets. And these will also be categorized with donor restrictions and without donor restrictions. And here generally you will see under the revenues part, they will have huge amount of contribution revenues. And in the example, you see there are two columns. This is how they presented all of their contribution revenues and other source of revenues. They will present all those. Of course, operating items will be come first, and then they will also show their expenses. And you already know expenses should be categorized into two parts, which are program service expenses and another is supporting service expenses. So here all not-for-profit entities either will show these classifications on the face of the statement of activities, or they could also put it in their notes, or they can prepare a separate statement just showing their functional classifications. Remember, program service expenses are related to the mission of the entity. On the other hand, supporting service means that is related to fundraising and administrative costs. Now the other part, you will see the last part in next module. It is talking about the statement of cash flow. For the statement of cash flow, they will prepare into three parts. Of course, they will show all of their operating activities, financing activities, and investing activities. And at the same time, they need to disclose some non-cash transactions. For example, contributed securities. They could receive some other company's stocks or bonds as a donation, or any construction in progress or other fixed assets that they purchased included in any accounts payable, or contribution of beneficial interest. And FASB encourages to use the direct method for preparing the cash flow from operational activities. Of course, here you will see that if they don't follow the direct method they used to prepare a reconciliations, now FASB says that if you use the direct method, you don't need to prepare the reconciliations to show the changes in your operating activities.